Tired of being one step behind the market? You see a perfect setup on your charts, you pull the trigger, and then, wham! The market reverses and you're left holding the bag. Sound familiar? For so many traders, this is a frustrating reality. We're taught to rely on indicators, these mathematical formulas that are supposed to predict the future. But here's the uncomfortable truth. They can't. By their very nature, indicators like the MACD, RSI, or moving averages are lagging. They are based on past price data. They tell you what asterisk is asterisk happened, not what's asterisk about to asterisk happen. In today's lightning-fast, volatile markets, relying solely on lagging indicators is like driving a race car by only looking in the rearview mirror. You're setting yourself up for a crash. Think about it. We're bombarded with an insane amount of data. Dozens of indicators, news feeds, expert opinions. It's overwhelming. This creates what we call the noise problem. Instead of clarifying the market's intention, all this information just creates a chaotic mess. It's like trying to hear a whisper in the middle of a rock concert. The real signals, the subtle cues that precede a major move, get completely drowned out. Even worse, this reliance on indicators leads us straight into a psychological trap called confirmation bias. We start looking for signals that confirm what we already believe. If you want to go long, you'll unconsciously focus on every bullish signal and ignore all the bearish ones. You're not analyzing the market. You're just looking for an excuse to do what you wanted to do anyway. This illusion of control, the belief that our indicators give us a crystal ball, is one of the biggest reasons traders fail. So if indicators aren't the answer, what is? How do the pros, the traders who consistently pull profits out of chaotic markets, do it? They've developed something far more powerful, a finely tuned market intuition. This isn't some mystical psychic ability. It's a skill, and it can be trained. At its core, market intuition is an advanced form of pattern recognition. It's about training your brain to see the bigger picture, to recognize the subtle, almost invisible patterns that precede major shifts in market dynamics. It's about moving beyond the simple lines on a chart and understanding the context behind the price action. Think of it like this. A new driver focuses on the dashboard speed, RPMs, fuel. An experienced race car driver, on the other hand, feels the car. They feel the grip of the tires, they hear the subtle changes in the engine's tone, they sense the car's balance through a corner. They're connected to the machine. Seasoned traders have that same connection to the market. They understand that news isn't just a headline. It has a real, tangible impact on sentiment and order flow. They can sense when fear is turning into panic, or when greed is reaching a euphoric peak. This is the feeling factor people talk about. It's not a random guess. It's a gut sense developed over thousands of hours of focused observation, a subconscious recognition of familiar patterns that your conscious mind might miss. This internal compass is what allows them to navigate volatility, not just survive it. So how do you start building this internal compass? It begins with changing how you observe the market. I want you to try a mindful observation exercise. For the next week, pick one market and just watch it. No indicators, no drawing tools, no news feeds. Just watch the price action. Watch how the candles form. Notice the speed of the moves. See how price reacts at certain levels. Your goal isn't to trade. It's just to observe, to be present with the market's rhythm and flow. You will start to notice things you never saw before when your charts were cluttered with lines and oscillators. Another powerful technique is to backtest with a new purpose. Don't just look for how an indicator would have performed. Go back in time on your charts to a major market crash or a huge rally. Scroll forward one candle at a time and ask yourself, what was the mood here? What clues, however small, might have hinted at what was about to happen? You're not looking for a perfect signal. You're building a mental library of market behavior under stress. And finally, the most important tool in this journey is a journal. But I'm not talking about a trading journal where you just log your entries and exits. I want you to start journaling your hunches. Before you enter a trade, or even when you're just watching, write down what you feel is about to happen, and more importantly, why you feel that way. Was it the pace of the price action? A specific candle pattern? A gut feeling that the momentum was fading? Then, after the fact, you can go back and compare your intuitive thoughts with what actually happened. Was your hunch right? If so, what was the trigger? If not, what did you misread? This process of documenting, analyzing, and learning from your own intuitive hits and misses is absolutely critical. It's how you turn a vague gut feeling into a reliable, actionable edge. It's not magic. It's deliberate, focused practice. When you start to develop this intuition, volatility stops being your enemy and becomes your greatest ally. While others are panicking because their indicators are going haywire, you'll feel a sense of calm. Your intuition acts as a proactive risk management tool. You can sense a market top forming before the crash happens, allowing you to protect your capital or even position yourself for the downside. You'll start to see incredible contrarian opportunities. When everyone is selling in a panic, your intuition, combined with your contextual understanding, might tell you that the fear is overblown and an asset is now massively undervalued. This is how legendary fortunes are made, by buying when there's blood in the streets. Most importantly, your intuition will revolutionize your entries and exits. You'll stop chasing moves and start anticipating them. You will get a feel for the precise moment to enter a trade for maximum potential, and the exact moment to exit before the trend reverses. This dance of timing is what separates good traders from great ones, and intuition is your choreographer. Building your trading intuition is a journey, not a destination. It's a continuous feedback loop. You observe, you form a hypothesis, you test it, you learn, and you adapt. Your internal compass will get stronger and more refined with every market cycle you experience. This doesn't mean you throw away all your analytical tools. The ultimate goal is to create a synergy, a powerful partnership between your deep, fundamental analysis and your refined intuition. Your analysis tells you what to trade, and your intuition tells you when so embrace the process. Be patient with yourself. Start observing, start journaling, and start listening to that quiet inner voice. As you do, you'll discover you have a unique and powerful edge that no indicator can ever replicate. You'll finally be trading the market that exists right now, not the one that existed 5 minutes ago. Thank you for watching. If this video resonated with you, hit that like button and subscribe for more content on mastering the art of trading. We'll see you in the next one.